Hello and welcome to a brand new show of Market Makers. Now, at a time when Indian consumer stocks are in some kind of an epic bull run, what is the way forward for the India consumption story? Is this as good as it gets? So these are classic compounders. You should buy them, hold them, and just don't even think about selling some of these businesses, because yes, valuations may look attractive, but good businesses, they always come at a price in this kind of a polarized market. On this edition of Market Makers, I have with me someone who I can safely say is one of the finest consumer expert in India. He's got a track record of buying great consumer businesses right at the beginning of the curve. He's bought Titan, Trent, Britannia 8, 10, 15 years ago. So I've got with me Mr. Milind Karmarkar, Head of Research and Fund Manager with Dalal and Broacha. Mr. Karmarkar, fantastic to have you back on.
Hi, let me correct, I'm no longer Head of Research. So
it's only on the other side now.
Yeah, only on the other side.
Oh, wonderful, wonderful. Thank you for enlightening me, because since I know you from so well, I thought,
But research continues to be my passion,
okay.
So let me put it that way.
Wonderful. So let's talk about what's happening in the consumer space.
Yeah.
Some would argue that these are good, outstanding businesses.
Yes.
But ultimately, if you buy some of these stocks or some of these businesses now, they are not available at throwaway prices.
Okay.
And for a long-term investor, it is important to identify a good business, but it is also equally important to buy a good business at a good price.
Yeah, I agree with you there. But if you look at, 15 years back when we were looking at Titan Trent, they were not cheap at that time either. It's all about visualizing how large these companies can become over a longer period of time. So, we have in last 15 years, India's per capita GDP has grown 3x, or slightly more than that, 3.5x. Now, if you look at the next 15 years, and if it can grow at, say, a similar number, 3.5x, then we will be somewhere around $6,000 per capita. Effectively, what it means is that we will be somewhere around $25,000 for a family of 4. Now, in US, that is the poverty line. So, the entire India will be above US's poverty line. So, then look at the kind of consumption boom which can come in. And that is what I am banking on. So, I still believe that this is not the end. This is just the beginning for anything to do with consumption.
So your whole anchoring of your portfolio is centered around the fact that Indians will consume more.
Yes.
You got to buy anything which has got to do with consumption.
That's correct. But when we say consumption, it's not only focused only on retail or FMCG or white goods. They do form an important part, but then there can be insurance, there can be banks, there can be pharmaceuticals, and there can also be insurance I've already spoken about. Hospitals could be other. So there are a whole lot of sectors which come under consumption.
So I'll talk about all these subsectors one by one.
Okay.
So first, let's talk about retail.
Yeah.
You bought into Trent 15 years ago.
Yeah.
That time online retail was not there. Now
I
online
agree.
retail is there.
Yes.
We've known Walmart has come has voted for the online format because they bought Flipkart. So
Correct.
the biggest retailer in the world is not going for offline model, they are going for online model. Why are you bullish on the Indian retail model?
But then Amazon is going for a brick and mortar buyouts as well. So I think when it comes to online, it will be one of the ways in which we buy. So I'm sure many of them, like be it Trent or many of them, Titan or any of the other retail, Future Group and everyone, will go online some point in time, wherein they have this one more additional space from where you can buy the stock.
Is it urban legend that you bought into Trent 15 years ago, or is it actually true?
It is actually true. It was, and I'll tell you the reason for that. So it was trading at 60 rupees, a 10 rupee paid up share. And they had announced, they had just got money from sale of Lakme. And they had announced that they want to go into retail. So we thought that retail was a great idea, organized retail for India. There were virtually no players that time, very few. So we decided to go and talk to them. We talked to them. There was nothing much which they could say, except that yes, their focus was going to be organized retail. We looked at countries around, we looked at the US, and we realized that over a longer period, organized retail has got a huge scope. And even one more point was there, that at that point in time, Trent had 70 rupees cash in the balance sheet and it was available for 60 or 62 rupees. So it was virtually a no-brainer. And that's the reason why we went and bought it. Obviously, the market probably that time thought that the money will be whiled away, it will be lost. But we thought the other way around and we bought it and we just held on to
You've
it.
been holding on to Trent.
Yeah.
And you got no reason that you're looking at locking or booking out of Trent even after 15 years.
No, as I said that, I see another 3.5x growth in the per capita GDP of India. So I don't have any reason. Just an anecdotal thing that in the recent AGM of Berkshire, Warren Buffett was talking about investing in stocks. So he said in 1942, what was required was only a belief that America will do well over a longer period of time. So I think the same thing is true in India also. You need to believe that India will do well irrespective of what is happening at the current juncture.
That's a
at
great
any
point.
given
That's
point.
a great point. But you don't think Trent is trying to spread themselves too thin because they are present in the hypermarket format, which is Kirana Wala or Sabji Wala format.
Yeah.
They have West Side, that's
Yes.
another format.
Yes.
They've come out with a low-end fashion brand. So for a company of
Zudio.
that size, aren't they trying to spread themselves too thin?
So each of these segments has got a huge opportunity. Be it Zudio, be it West Side, or be it Star Bazaar, and of course Zara is their joint venture. So each of this segment in its individual capacity can be a very big business over a longer period of time. And who knows, over a period they may spin off these businesses. I don't know whether they will do that, but that's a possibility which I think, again, just
That's a
to go
personal
back.
belief.
Yeah, it's a personal belief. Second thing is, it is not a recommendation, as I always say. We are just discussing certain stocks which I like and which I hold over a longer period of time.
You've been very bullish on the entire food space in India. I mean,
That's right.
It's a large space,
Yeah.
10 to 11 lakh crore, and I may still be conservative with my estimate if I have to
know.
talk about the
I
food
know.
space.
Yeah.
Define that space for us. What is the best way to participate in that space?
So there could be many companies which are in that space. So there could be company like Britannia, there could be company like Pratap Snacks, which has come recently. I have not looked at the company, but one needs to look at these companies. There could be DFM Food. So it's not that we don't have there is Nestle, there is HUL, there is ITC. So there are huge number of companies in this space. I think individuals need to work on the numbers or look at the kind of opportunity which is there and then take a call and buy these stocks.
I was reading notes of one of the Buffett's interview on one of the media channels, and Buffett now seems to be acknowledging that the margins in the packaged food business or the dairy business or the food business, now they are getting diluted, and retailers will have a strong say, not the manufacturers.
Correct.
What could that do to companies like Britannia, HUL and ITC, because these companies are built around brands,
Right.
but some of brands are losing their mojo.
I really don't know whether it will happen over the next 10-15 years. Maybe 25-30 years it will happen, because as of now in India the situation is that these companies are much stronger than the retailers themselves. When retailers become extremely strong, like what happened in the United States, but it took nearly 50 years for that change, it can happen in India as well. But the size of opportunity will not come down. That is still there.
What I've always admired about you is that typically when you value a business, you are not in this madness to buy something sasta.
No, I'm not.
You go for something which is very cheap.
Yeah.
So how do you judge the potential of the business? Because the analyst in you, I'm sure, is curious to understand how to value the business.
Yeah.
If you're buying gold at the price of diamond or gold at the price of silver, it may not be a good investment. So how do you convince yourself when you first time bought Titan or Trent or Britannia? Because like you said, they were never cheap also.
So I'll give you an example of Titan. When I bought Titan, I think the turnover was roughly about 800 crores. And
That's it.
And the reason, I'll tell you why. So Dalal and Broacha's main mentor, Mr. Priyakan Dalal. So I trained under him. So he used to tell me that your investment should be such that the amount you invest after 20 years should give you similar dividend. So anyway, so keeping that apart, what happened was that it was basically, you need to think. So your right side of the brain should work much more than your left side of the brain. So you should be able to visualize how large the opportunity is, and then have a belief that based on the corporate governance the promoters have, is there a clear-cut distinction between management and shareholders and so on and so forth, and whether the company can deliver a long-term great growth in the company. You just buy and sit on it, and then of course keep monitoring. It's not that you just buy and just forget about it. You keep monitoring. 1 or 2 years of bad performance is fine, but if it goes beyond that, then you need to be serious. But otherwise, just hold on to the stock. And so coming back to the 800 crore, this year's profit is I think 1600, PBT is 1600 crores. So it's 2 times the turnover 15 years back.
So you still feel that the classic buy and hold, which is a rarity in today's market, and that breed of investors is no longer a true blue.
No, people do say that buy and hold is no longer works, but I think it still works. I think it still works.
But for example, when you bought into
At least in a country like India, where we are still at $1,700 per capita GDP, I think it will still work.
Now, you are saying that, look, when you bought a stock, you were able to visualize the potential of the business and what India could be, or where the potential of consumer is.
I think fantasize is a more better word than visualize.
Of course. But when you bought into Titan, it must be a watch company.
Yes.
There was no jewelry business.
Okay, let me tell you there. So that was the time when they announced that they are getting into jewelry. Okay. So we bought Titan not because of watches, but because of jewelry.
Now, in markets, you don't make money by betting on yesterday's growth. You have to identify tomorrow's winners.
Correct.
So where do you think the potential of this kind of a dynamic change or growth potential or exponential demand could kick in?
So there are, for example, hospitals. Now there is a big opportunity there. I think last time also when we discussed, I talked about hospitals. They have not gone anywhere. Maybe they have come down only.
Isn't that against your grain, because hospitals is a very asset-heavy model?
So there are companies which are getting into asset-light model in hospitals as well. And I think when it comes to consumption, I think poor people typically spend nearly 10 to 20% of their income only in healthcare. So especially hospitals which provide the lowest cost services, I think those hospitals should do pretty well over a longer period of time. Same thing is true for insurance also. I think insurance has just started picking up in India, and there is a huge opportunity going forward.
Okay. A follow-up question on hospitals, and the news is that now government is committed to bring the healthcare costs down.
Yeah.
And first, your heart operations, they were capped, both in terms of pricing.
Correct.
Then knee operations.
Yeah.
We know the regulation Delhi government has just come out with.
Yeah.
It started with Delhi, but you don't know whether this will be an all India rule as well or not. Which clearly means that for hospitals, there would be a cap.
Yes.
Cap on margins and cap on profitability.
Yes. So what hospitals need to focus on is reducing their costs. Okay. And if they can do that, I think a decent margin is still possible in hospitals.
Would you be going for specialist hospitals, or would you be going with pan-India hospitals?
So I will be going in for pan-India hospitals, and I will also be going in for the lowest cost service providers in that particular specialty or in general.
But just to take a hint from what's happening in Fortis right now, the fact that there are multiple bidders and everybody is upping their price on a daily basis, it clearly means that genuine long-term investors and good entrepreneurs understand the potential of the healthcare sector.
Yes, it's absolutely correct. And same thing had happened in retail also at that time. In 2003, there were so many people who wanted to get into retail. Many of them ultimately lost out. But yes, the opportunity was there. Same thing is going to happen in hospitals also. I'm sure many of them will be bought over, or there will be mergers. But there will be 3-4 good players which will continue and do well over the longer period.
When you say insurance, now insurance is again a very complicated space. There is life insurance, general insurance, reinsurance.
Correct.
Within life insurance, there are companies which are giving a ULIP-based model, completely stock market linked model, right?
Yeah, which I don't.
You don't like.
Yeah, I don't like.
So you like life insurance, you like general insurance?
I prefer general insurance.
General insurance. Why is that?
It's simple. Every year you know what's your P&L. So there would be one bad year, but that's fine. I mean, overall, generally at the end of the year, you know how good or bad the company is. And the opportunity is large, because there is medical insurance, crop insurance, motor insurance, and so on and so forth. So the opportunity is huge there.
So just to break it for our viewers, for those who don't track the insurance sector that well, when you say general insurance, what are you trying to imply?
No, I couldn't get your question.
So when you say you like the general insurance companies, why do you like them?
So as I told you that there is a big opportunity there. Not many people are use general insurance. So like medical insurance for that matter, which is an extreme necessity in India. And significant portion of the population, apart from people like you and me who stay in cities, have a medical insurance. So that is where the opportunity lies. In addition to that, there's crop insurance which the government has come up with. I think that also over a period of time will be a big opportunity, because I met an insurance company some time back and they said that farmers have to be literally forced to take insurance because they're not willing to take. They need to be educated. But the opportunity there is large. So I think these are the two areas where because motor insurance and all that is compulsory, so it's covered already. But medical insurance and crop insurance.
How come you don't like autos? I mean, it's a pure play on discretionary spend.
Okay, so I like autos. It's not that I don't like autos, but within autos there are very few pure play increasing per capita income plays. Like Maruti is of course one of them. So I'll just give you an example about how per capita income, changes the perception. A few days back, my house help came to me with a box of sweets. So I was just asking her, what's the occasion? Did your son pass SSC or something like that? So she said, no, I bought a car. Oh, wow. So I was stunned. Believe me, I was stunned. So I was then just wondering that how is this possible? So then I realized that if you do some math, in 1985, cost of Maruti was roughly about 52,000 or 55,000. Dollar was about 28 rupees to a dollar, and per capita income was $300. So at that point in time, Maruti car cost roughly about six and a half times the per capita income. Today, at 2,70,000, the base model, and dollar at 68 rupees, and per capita income of $1,700, the car now costs 2.2 times the per capita income. So it's very simple. The affordability has gone up. So yes, cars could be an interesting, passenger cars could be an interesting place. But apart from Maruti, there is no large player because Tatas are there. But then again, significant portion comes from CVs.
If you look at the track record of Titan, Trent, Voltas, they've been great compounders.
Yeah.
But in last 15 years, Reliance also became a large company.
I know.
A Sun Pharma got created.
Yes.
L&T became a behemoth.
Yes.
Any regrets that you missed on some of these names?
Well, L&T was a stock which we had purchased in our managed account scheme, but we sold off. There is a reason for that. I don't see infrastructure companies being compounders over 20 years. There is a short period of time when there is a big spurt which comes in them, and then they grow steadily. That's what is happening currently. So yes, they are great companies, there is no doubt. Sun Pharma is a great company because pharma does fall under our consumption scheme. So we are looking at pharma space.
But what is your understanding of this, of the complexity of what's happening in the generic model or generic space?
So there are two things to it. One is that on one side, the Indian government also wants the prices to come down, and so does the US government. US government or US FDA was always quality conscious, but now that they have set up an office in India, their inspections have become pretty frequent. And there were issues with most of the Indian pharma producers for simple reason that probably they didn't understand the importance of procedures in US FDA norms. They are adhering to that. The costs may go up, their margins may come down, but over a longer period of time, opportunity is huge. So I don't see them as I do look at it as great companies over a longer period. One needs to look at them now. I think the time has come to look at them as well.
So if I have to put a graphic, and if the headline of that graphic is what is Milind Karmarkar's checklist like when you're buying a business or identifying a promoter, what are the 2 or 3 things which have to be part of this checklist?
So it's very, on one side it's very simple, but at the same time it's slightly complicated because I look at the corporate governance of a particular group or of particular business. Now, how do I define it? it's very difficult. But typically what I look at is good auditors who are holding office for a longer period of time. So that is key, because many a times we have seen this happen in India especially, where you want to come out with an IPO or something, you hire a big four, and after a couple of years the big four goes away. So I want to see a company who is having a big four auditor over a longer period of time. Corporate governance again is an issue where, being in the market, I have got an advantage for 25-30 years that you have a reasonable pulse of which of the promoters are good and decent and which have certain problems. So that is one thing. Second is that the business should have a very, very long-term growth potential. And when I'm saying growth potential, it's very simple, that if your GDP is growing nominally at about 11%, then unless and until your business is growing at 15 to 20% minimum, there's no point in investing in that company. Or the business should have the opportunity to grow at that level. So that is the second thing, and buy at reasonable price. But when I say reasonable price, it is reasonable price after considering growth. So that is the reason why in the early times I could buy Graha Finance, or for that matter many shares which technically looked expensive.
But that kind of a treasure hunting, do you think it is difficult in this kind of a market?
So it's very simple that frankly, even if you get one or two shares one or two companies every year, it's more than sufficient, because you already have 10 in your
so typically how many stocks you buy in a year?
Maybe 2 or 3.
And how many do you sell in a year?
None, virtually none. So like in our portfolio management scheme, people who have been with us for last 10 years, 80% of their portfolio is same, it's just buy and hold.
So how do you justify the yearly charge?
Sometimes it becomes difficult, let me put it that way. But we don't charge any performance fees. So it's a fixed fee. And whenever a client comes to me or when I'm talking to them, my thought is very simple. I tell them that over a longer period, markets have grown at about 16% compounded. So anywhere between 15 and 20% is what you should expect from the markets. There is a possibility that we may underperform the markets for 1 or 2 years. But over a longer period of time, we are reasonably confident that we will be able to deliver slightly better than the market return.
Yeah. Large gains are made when you are able to identify a business which could be at an inflection point because of earnings or market share.
Correct.
Or a stock where earning potential could surprise us.
Yeah.
Because markets, they tend to price in the near-term future. When it comes to medium-term and long-term, they always get confused. So give me an example of where do you think markets currently are pricing in too much of growth, and one example of where markets are pricing in too much of fear.
So I think retail is a classic example where probably markets are pricing in too much of growth in the shorter term. Okay. So there is a possibility that in the shorter term this segment could correct. I think too much of pessimism is built in pharmaceuticals. So there's one more area where I think people are excited, which is infrastructure. I'm not excited at all.
Why is that?
Because I think the best days for infrastructure were between 2003 and 2008, when capital goods and infrastructure stocks went up anywhere between 10 times to 60 times. Best days for them are over. They will at best be market performance.
Closing comments and final question. You started your career, I think, in early 90s.
Yeah.
Now, if Milind Karmarkar of 2018 meets Milind Karmarkar of early 90s when you started your career, what advice would you like to give the Milind Karmarkar of 1990s?
Don't trade. Don't trade.
Very simple.
Very simple. Don't trade.
Which is one stock you regret selling late, and which is one stock you regret buying early or selling early?
So the first, in first case, I had bought Thomas Cook was my first stock which I bought in the market.
The classic.
The classic. And in I think 3 to 6 months, the price doubled, and I sold it because I thought that I was great. I understood everything, and the rest is history. After that, it went up nearly 100 times. Okay. So, and I went and bought a car out of that. So that's a depreciating asset.
But that has its own pleasure. So you can't compare the pleasure of owning a stock in Demat versus owning a car and driving on Marine Drive.
But that time there was no Demat, so I was owning the shares also in physical form. But anyway. So that is definitely a regret. That taught me a lot of lessons.
Appreciate your time, and I always look forward to our interaction. It was brilliant.
Thank you, Nikunj.
And I'm sure our viewers would have also learned a lot from this.
Thank you.
Thank you for tuning
in.
Yes, please.
Disclaimer that whatever we have discussed today is one, my personal opinion. Second, it in no way it's an advice to people to buy, sell, or follow the strategy which I follow. But that's what I believe in.
Of course, this is a standard disclosure, and we'll try and put the disclosure
All
out as
right.
well. Thank you for joining us, and thank you for tuning in and watching this edition of Market Makers.